Be a check. Well, good morning, folks. How are you? Hope you're all doing well. You guys can hear me okay? Let me know on X. Did say we hear you, old man. Good morning, folks. How are you? You should be hearing me. Right. All right. Hope you're doing well. So, in the process of greeting my son, who got here late yesterday, he won't be here today. I told him to stay home, just watch the stream. We will be very, very brief. I will sit with you and watch the carnage at 8:30 with the CPI number, and then I'll break away and I'll go about my business for today because that's about the extent of the time I have of things I take care of and whatnot, or not market related. So I also noticed I didn't mention a couple things I said I would say during the live stream yesterday. So because of the distraction of my son getting here, I said I would tell you what certain things were. Um, the Asian session displacement that was appearing on the chart yesterday, that's this right here on the 7th. You may have seen this as well. That's a displacement. Okay. And we had another imbalance on here that was an inversion fair value gap. It's this right here, the 1040, Friday, January 9th. You'll see what that unmarked box was, okay? So that's what that whole business was. So with that bit of housekeeping out of the way, as a reminder that this morning at 8:30, those that are out there over leveraging, not knowing what they're doing, not paying attention to the economic calendar, not respecting the risks, they're probably going to have their face torn off this morning. So if you are not someone that is well versed in risk management, you don't know what you're doing, and you're in the market right now, close your trade. Okay. I'm doing you a big favor by saying that because chances are you're probably going to get harmed very aggressively. So there's my advice to you today. Notice it wasn't get into a trade; it was get yourself out of it because you're probably going to get hurt if you don't know what you're doing. If you're brand new, trust me, it ain't worth the risk. All right. So in keeping with every time I ever mention CPI or PPI numbers, invariably I am generally wrong more times than I'm right because they use that data and the interest around it because they know there's a lot of people that want to trade big volatility. And there's always going to be a gambler. There's always going to be someone who's going to plop down a bet and be able to go on the social medias and say, this is what I did, this is what I made. But, if they're going to do that, then do it every CPI, do it every PPI, and you'll see that that doesn't happen. Nobody does that. And even me, I consider myself above average in terms of knowing where the market's going to go. I don't know what it's going to do today. Okay. So I want you to know that. I want you to do that going in advance. The commentary I'm going to give you is a review first, and then I'm going to observe what it does. Okay. My interest is predominantly in do they run it in the direction of that 133 half level on the daily chart we were looking at, 26,133 half. That's what I want to see. Or do they use the 830 news driver as the CPI data? Are they going to use that to facilitate sentiment going lower? Then do they use PPI tomorrow to go the other direction, in the direction of 26,133 and a half? So it's more of an intel session for me, and I'll give you my internal dialogue as I'm watching price action. But I've afforded myself about 20 some minutes or so to kind of like review yesterday, so that way you know what was communicated, and then you can go back and see if it was true or not. Okay, and also to kind of like bone up your understanding about what it is I was teaching yesterday. There's a couple points I wanted to bring to your attention that actually happened that while live streaming and having a conversation with my son, which I appreciate the comments for that. A lot of you were very receptive of having heard how I talk with him and whatnot. So anyway, let's get on with it. Um, for the folks that leave comments saying the session or the lecture begins at you're the only one that sees that, by the way. There's a bunch of people that did that, and I appreciate that. I understand what you're trying to do, but on the comment section, I'm the only one that can see it. I use it for a feedback, so that way you guys can tell me what you learned. If there's any lapse of confusion, shortcomings in your understanding, that I failed to say something. And real quick, it just reminded me, as I mentioned, the Asian session kill zone. I misspoke last night and I said 7 a.m. to 9 p.m. in my haste. And that would have been something if it would have been a recorded session. I would have had Control M tapped and then fixed it. Okay. But I didn't even pick up on the fact that I said 7 a.m. to 7 p.m. That's a very large amount of time, but it actually is corrected automatically by me saying it's a 2 hour window. So there's no way that could have been done. So I misspoke, obviously. But for clarity, the Asian session, whether you're trading Forex or index futures, if you want to keep it really, really simple, there's a 2 hour window. Just utilize that. Okay. Um, I think that's going to be it. Let's go right into this bit of business. All right. So we were going on about a couple things yesterday, and I talked about how the market would likely utilize the Asian session buy side liquidity by commentary only. So during the beginning of this stream, you had some things on your chart or your perspective of looking at my chart. And while it was going on, it used the 7 a.m. pre-market start time and then the first presents a fair value gap there. And I talked about how that little tiny little gap there wouldn't be represented by me in my analysis as the first presents a fair value gap because it doesn't cause displacement. But if you look real close, sticking to the rules that I teach with my fair value gap, okay, this imbalance right there is the one I talked about being, that's the one. That's the first present the fair value gap during pre-market session hours. That means 7 o'clock to 9:30 opening. So that 2.5 hour window of watching price action, what you're going to get from this is the rules I've already shared are consistent, but my focus, okay, my interest in the market is zeroed into a very specific candle, a very specific time of day. And while this little area down in here, watch, we'll look at this. If you note that high and that candle's low, you can see it did work that, but it's only the wick. Okay. So some of you may say, well, look at this. ICT got it wrong because it went down to the first gap after 7 o'clock, because here's 7 o'clock right there. That candlestick, the one with the little wick above it. And then here's 701 and 702. That little gap, I'm not interested in that. But now watch what happens, okay? That gap is a common gap to me. This is the first presented fair value gap because it displaces above this high, not engulfing the previous candle. That's not what this is, okay? This displacement is technically it's a shift in market structure, okay? An engulfing candle is not a shift in market structure. I don't care what 20-year-old tells you that. That's not what that is. This is a shift in market structure. Okay. This candlestick gap right there, if we were using, as I teach it, this is the first presented fair value gap. So you have to use candlestick number one, because this is number one. Number two is the imbalance or inefficiency. And number three is the close of the three candlestick pattern that frames the imbalance in the middle, or candle number two. Candle number one in a bullish fair value gap, candlestick number one's low is the stop. You see how easy that is? That's not complicated, folks. I see a lot of people out there going crazy because I posted some guys, I mean, hey, you want attention, I'll give it to you when it's fun. But this gap here, the real one, that is candlestick number one here. So the stop is there. Was it in jeopardy? No. The body stayed inside of the first positive fair value gap as I called for. And this little inerrant wick, okay, it's permissible. Why? Because there is a small common gap there, but the stop loss is down here. So the logic still holds true. Okay. When we use fair value gaps, bullish ones, the stop's got to be below candlestick number one's low. When we're looking at bearish fair value gaps, the stop is above the high of candlestick number one. Very, very simplistic. Okay, very, very simple. So that was that. And then I talked about how this idea, this diagonal, quote unquote, trendline support, I talked about that being a trendline phantom, and it's a retail diagonal support fallacy. Okay, it's when I'm looking for, and go back and listen to the live stream because you'll hear me say these very things, but I want you to take this away from what I taught yesterday live and then what we have here in the aftermath. This is what you're supposed to be doing when I teach, when I talk about the market, or you're just doing it all by yourself and you're watching your expectations pan out. Then go back the next day after you slept. So you come back and you look at it and you'll see a lot of things that you didn't first notice. And then also it'll solidify a lot of things that you're hoping to learn as a consistent model. You'll be shown evidence to the fact that these things hold up. There's validity to it. It's not contrived. It's not cherry picked. It's not weak. It's very, very strong. So I mentioned how because of this being in this place here, I talked about how I like to look for when I'm diametrically opposed to things like this. This is retail logic. Fair value gaps and smart money concepts are not retail logic. They they cannibalize. Let's get ready to say carnivalize. I make fun of the ideas of all the retail stuff. Everything, everything that's not my stuff. I mock it all the time because it doesn't deliver the same measure of precision, consistency. There's no ambiguity to it. It's very specific and relative to time, as we talked about yesterday. So go back and you'll listen to this. And this is your challenge. Okay. This is your homework. Go back and listen and see if I did not say that this trend line would be the liquidity that the market would seek. And this was the first percent to fair value gap. So relative to time, this is where you anchor to. And the price and liquidity agree with both. So the stops below here, they would target that. It's the midpoint of the trend line phantom. Whenever you see a trend line, I look for 3 points where it is trying to gravitate to. And if I can see it visually, I don't draw the trend line on the chart, obviously, but for teaching purposes, I do that so students understand the internal dialogue I'm having. Okay, I can see how people are looking at that thinking, okay, that's a upsloping channel. It could be a pitchfork. And then the liquidity resting below that very specific low right there, that's what we're going to target. Okay. And then the market opens, it trades down into the fair value gap that I called as first presented fair value gap, and the liquidity is absorbed there. And just for good measure, it goes right into that little tiny little common gap, but never breaches the low of candlestick number one that frames the actual first presented fair value gap in pre-market session hours, which is 7 a.m. start time, Eastern time. Also, would you want to check and make sure I said, what about this imbalance here? Okay, what would you do with that? Would you go short with that? And I said, no, because we're in a holding pattern. What does that mean? If the market's likely to go higher and we were using the 26,133 half on the daily chart, those relative equal highs as the higher time frame draw on liquidity, the frame, the basis of what direction are we trying to trade in? Now, there's all kinds of fluctuations. There was short trades yesterday a couple different times, but the best moves are going to be framed on the higher time frame daily bias. What's it likely to go to? Because if you're going to be trading, and this is something I learned from Larry Williams, so just understand that this is something that's held true to me, and he's been doing it longer than I have. Okay, so if you're short-term trading intraday, it's advantageous for you to try to be on side with the larger move and where the likely candlestick on the daily chart is going to close. Hold for the close. Okay, that's Mr. Williams' idea of advice in terms of day trading. If you're going to day trade, try to hold for the close. So in layman's terms, it is if you think the market's going to go up on the daily chart and have an up close candlestick. Okay, if you think that's going to happen, before you even take a trade, before you even sit down in front of your charts, then it's advantageous for you to look for trades that are going long and hold something, if not all the position, but something until the close of the day. Now, his idea is closed to like when the session ends 4 p.m. Eastern time. I look at it this way. If I'm getting long in the opening range at 9:30 to 10 o'clock or prior to in pre-market session hours, 7 o'clock and thereafter, I'm going to be looking for 10 o'clock to 11 o'clock to offboard something because that's profit taking. That's London close time period, and we're getting ready to enter New York lunch. And you should be writing these things down, by the way. They'll be in the book for the people that are lazy and you think they can only learn it from a book. But I'm telling you, I'm teaching everything on the YouTube channel, so you don't need to buy the books. Okay. Nobody sells books like I'm doing. Don't buy my book. I'm doing it all for free on my YouTube channel. But writing down these things, you'll see that it appears in text form. It's not something that's going to be advanced knowledge. It's something that's simply being, you know, brought together in a tome of 3 books. That way you have everything from my mind and what I'm going to teach. But having the idea of looking for the daily candlestick to extrapolate to the upside when you're bullish and only trading on that side affords you the luxury of finding these big running moves that just take off and they're just really fun to be a part of. But you won't ever catch them if you're trying to just trade on every little minor fluctuation on the daily chart, ignoring that bias and only trading the internal little like this is a minor here, and you can go short on this fair value gap there at the Asian session buy side liquidity pool. That right there, sure, you can trade that. But what happens if you don't take profit there? What if you didn't know what I was outlining yesterday, which was the liquidity below here, and that's what I talk about. When I was teaching Forex, I said when time and price meet in grade school, remember the multiplication table? They had 1 through 12, at least in when I was going through grade school. It was 1 through 12 across the top axis, and then 1 through 12 on the left-hand side axis vertically. And then you would just say, okay, I'm going to find number 6 and number 7, and then go to where they meet on the graph. That's the same thing. That's the same premise. Here's the liquidity, and here is the range at which price is going to go to. So liquidity, price, time. See what happens? So every time I'm looking for price action and moves, the algorithm is doing the same thing. It's just like a multiplication table. It's finding time and price, and when they meet, this is what you get. You get the answer to the problem of you being broke. So this inversion fair value gap, I said that you wouldn't use that to go short because it's a holding pattern. Holding pattern for what? It's going to use the 9:30 opening range to 10 o'clock to then start running bullish using the liquidity that I outlined here, breaking this trend line support, upsetting those individuals that are buying here, buying here, buying here, anticipating this being a breakout to the upside. They have to come down first to absorb this liquidity I talked about into that first presented fair value gap. And then you get it here. Okay. Look at the delivery on that candlestick right there. It opens at regular trading hours, opening range low, trades to the low of the inversion fair value gap here. It was a sell side imbalance, buy side efficiency with a volume imbalance at the low of it. Anything trading up into this, only if it drops from there, is a short-term fluctuation. Now, that's beneficial for you to read the tape. Does it offer that? Yeah, but look how muddy and dirty it is because it was part of a holding pattern that will release that holding pattern when the market opens at 9:30. And then the market rips through there. We open, trade down to the low of that inversion fair value gap, some random volume imbalance. Okay. If you recall, when I first started teaching volume imbalances, mentorship students, the idea of using volume imbalances inside of old price action, I would take their attention right to that and not show this entire range. It would just be pointing to that because I wanted to gradually teach it because I had leakers, I had people repackaging and selling it, and then taking that money and buying sports cars and putting them on social media to look like they're super rich or superior traders, but you don't see them trading. You see them selling their courses with the proceeds they made from the sales of those courses to buy things to show you materialistic stuff. And I don't do that. I show you precision in the marketplace. I tell you before it happens, and I make millionaires. There's a strong contrast, and I do it for free. But that volume imbalance right there would be an example how I would, in the past, only look at that right there. But it's part of the whole grand scheme of this inversion fair value gap. And remember, it was a couple years ago I taught the inversion fair value gap first in Kit's ICT Concepts Trader Roundup when I was just bloviating about certain things and what you could go out and start looking for next. I told you to start looking at to look at my fair value gaps and then invert them. The inversion aspects of using them as the opposite of what you expected when they first formed. So a SIBI is usually, when you're bearish, something to sell short in. But what happens if it overtakes that? The goobers will say, see, it doesn't work. But that's your inversion fair value gap. So if you're expecting a Judas swing going lower, you're going to look at that fair value gap that's a SIBI, sell side imbalance, buy side inefficiency, or a down closed candle. You want to wait for it to be overtaken and then use it as a foothold to push and to propel price higher, as you see it does here at the break time at 9:30. Price, time, agree. The range, the price, the time, perfect. I said this was going to be an inversion fair value gap in a live stream, not to be a shorting, to go long, to use it to send price higher. Go back and watch the stream. That's the stuff that you guys miss. And then these are the little bullet points that you use to twist in the side of people that want to fill your mind up with doubt, because I'm giving it to you. I'm showing it to you. I'm proving it to you. It's there. That's real order flow. What's more powerful? Let me ask you that. What's more powerful? What's more advantageous? To know the exact price, the exact time price will stop and turn on a dime, or how many bought that low of that candlestick's wick? What's more important to you? You have to wait to see how many people bought there for the purpose of volume. And folks, go back and put your volume profile on there, and you're not going to get this. It's not giving you that information. It's not giving it to you. It's not giving you that. It's not talking about it's going to go to that right there. And that's where the largest influx of turning takes place. And I don't care how many contracts were accumulated and bought inside there. I just told you where it was going to do it. What's more advantageous? You going to worry about the numbers, or are you going to worry about the time and price where these moves are going to form? Does that number of contracts being bought and sold make you any more money than me telling you and teaching you and seeing my students become millionaires using it all around the world? What's more advantageous? Simplifying it and saying, okay, I just want to know where it's going to go, what time it's going to get there, and should I buy it or sell it? That's it. That's all we're doing, folks. That is not complicated. We're looking for a long-term, higher time frame draw on liquidity and where it's going to go. So ultimately, you see it rips off, tearing off into that. And there's that 1040 I showed you, inversion fair value gap that we extended forward. It went into that. It's an eighth, by the way, if you look at that on that. And then I talked about up here how before the market ran up there, I said this is new week opening gap, and the regular trading hours opening range gap high where we settled previous was here. So we had new week opening gap, regular trading hours, previous settlement was this purple line, and it went right up to it and hit it perfectly. Look at that price right there, 25,933 half. What's the candlestick's high right there? You're going to look at this price right there. What's that price? You like that? You awake? 25,933 half. Listen, schmucks, you can't get better than perfect. Come at me, bro. You like that? And then if that wasn't enough, I said back here, I said, now here, you want to have at least 80%. Why is this guy yelling? This Guy's unstable. It's all part of the showmanship, folks. I promise you, I am not bipolar. That's just something I hook you to say, wow, I want to study this guy because he's odd. It's all control of you, the audience. That right there is a minor sell side liquidity pool. And that was where all the stops were until this formed. And then they want to crank their protective sell stops on their longs right underneath that low. And I stated this, go back and watch the stream. I don't want to see this low taken before it trades to the low of the new week opening gap. That's exactly what I said. I said if it takes out that low, then it's probably going to have a little bit deeper retracement, and then I would be done for the morning, and I wouldn't consider anything interesting past that point. But look what it does. It goes right to the price I said it was going to go, and then it drops down to that low. That is premonition. That is forecasting. That is predicting. That is foresight. It's proof of concept. It's understanding real order flow. And I didn't have to point to any kind of numbers inside of a candlestick. I didn't have to talk about the depth of market, how many orders are sitting at a certain particular price level, above or below the marketplace. I'm not worried about iceberg orders. I'm the chillest motherfucker there is. I'm the iceberg, okay? That's me. That's me out here doing that, okay? I don't need all that gimmick stuff. You don't need all that gimmick stuff. You don't need to pay for anything except for the fees that your broker allows you to have to set the data up through. Done. $45 a month, the bundle at AMP. There it is. That's not a plug for the brokerage firm. I don't get anything from it. I'm not introducing broker. I'm just telling you that's the only fees I'm paying. And anything above that is just costs. Fees, commissions. That's it. I'm not paying for gimmicks of anything in the $7 I use for the trading view to have the data come through the charts to show you guys what I'm teaching. That's the only costs to me. I'm not paying for any kind of little gimmicky thing. None of that stuff. That's cheap. We're trading on the cheap. So we only got a minute and a half. We ran up into new week opening gap, trades down below the low there, absorbs that, then uses the, what's this price right there? When it trades down into that, what is that right there? That's an eighth. Let me see if I can get my old eyes here to work. 938 quarter, 938 quarter. What's the low? And you're going to be looking at this price here. What's the low of that right there? Hot damn, look at that. That is luck. Give it up for rookie sensation ICT. Woohoo! Look at that. 938 and a quarter. Find that in your fucking volume profile because it ain't there. Okay? It's not there, folks. Elliott Wave doesn't know anything about this stuff. Never heard about it before because ICT didn't come into the timeline yet. Okay? So this level right here, that is the 7th daily high, old daily high. That's the liquidity they sweep right there. And then we break lower, we trade back down into new week opening gap. Overnight, they sink it down and worked inside the ranges and the levels I told you about. You can see it there. And now I just want to get right over here and watch the carnage. Look how they use new week opening gap again and record trading hours, opening range gap high. So again, let's see if they drop it aggressively, the throw off sentiment, because you know that daily relative equal high is obvious to me, or do they rip it higher? There we go. So you want to trade that? You want to trade that? It was 10-piece shorts. That was brutal. Remember that red line? That's January 7th old high. Yeah, did mark yesterday's high. So let's do that. Everything I'm showing you here is just as I sat and looked at the charts first time. That's what that is. So there's yesterday or Monday's high. Regular trading hours high. So now if you're brand new and you're wondering like, wow, like look at that move. It's all predicted by the economic calendar. It's like a TV guide. You know, I'm a 70s kid. I grew up and was born in 1972. And we didn't have the luxuries of having the TV guide or the guide on our TV or whatever platform you use to show you what time programs come on. So we had a magazine that we had to pay for, and they would tell us in advance for what was showing on TV, any movies, any times of the shows, any kind of specials for the holidays. And there you go, it just pierced yesterday's regular trading hours high. And what we're seeing is do we want to ramp through that? And up here is that relative equal high on the daily chart we were talking about a week or so ago. So the idea is looking at the economic calendar, and I kind of opened up yesterday's live stream with that as a warning in terms of risk. We had CPI data, which is what you're seeing here. And tomorrow at 8:30, the same time, Eastern time, they'll release the PPI numbers. And then on Wednesday, I'm sorry, on when, uh, yeah, Wednesday, it's retail sales. And then Thursday, it's Philly Fed and manufacturing index and unemployment claims. So there's a lot of things going on this week. If you don't know what you're doing or you're over leveraging and you're offside, you're going to get cooked. Okay. So my question to you is like, if you don't pay attention to economic calendar, you're not aware that these things are they're going to happen. And there are certain reports like CPI, PPI, FOMC, rate announcements, not the minutes. The minutes aren't like all that important. They're like cause a whole lot. They can. It's a rare thing, but you have to be aware of that. And they happen in the afternoon. So there's these times of days where certain economic drivers or volatility injections, I call them, where there's a medium or high impact. This is a high impact news driver. That means it can rip your head clean off. If you're offside, that means let's assume that for a moment that you were looking at this gap here and saying, okay, I'm going to go short and look at this. I'm going to make money. And then you don't know CPI is coming out at 8:30. And in one candle, it's traversing from a high. I'm sorry, so let's start with the low. The low of 905, well, 104 handles in 1 minute. Can you weather that? Can you stomach that? You guys that are trading 15 contracts because your prop firm said you could, you can't, man. So you have to know what you're doing. Okay. And that's why I try to be like the Mr. Rogers of trading and try to talk to you like a dad, because not only am I teaching my kids, but I'm also teaching you because I care enough to make sure you learn it correctly. I don't want you going out there blindly and just assuming risk that's just asinine. It's stupid. Like if you don't know what you're doing, it can crush you. And in one event like this, okay, one event like this, if you're brand new or you're relatively new to trading, and maybe you had some success with using my concepts or anyone else's, process of doing it, if you suffer something like this, I'm telling you, it leaves such a scar that you will always be fearful of that happening. Even if you later find out that, oh yeah, it's that report, it won't change it. It'll feel like it's waiting behind a tree right around the corner, waiting in that dark alley that you have to walk past, and it's going to come out and take your account from you again. So to go into this sober minded, you want to just simply understand that there are reports that are released far in advance. You can look at what's going to be released next month already. That's how far away you can plan and say, you know what? I'm not going to trade the morning of PPI and CPI. I'm not going to do it. I'm not going to trade the afternoon of the FOMC rate announcement. Now, you can. I teach those things. I'm not saying you shouldn't do it. I'm not saying you shouldn't trade after 9 o'clock tonight, this morning. At 9 o'clock, I would go back in and start looking for trades. But you can't be in there ahead of 8:30 unless you have a higher time frame trade and you're really tamped down with unrealized profits and you've been in it for a couple days, which in this economic climate, I'm a little uncomfortable doing that. I used to be a short-term trader like that, where I would put a trade on, hold it for a couple days, maybe a week or so at the max, and then I would get out. But because of all the things that's going on around the world, all the geopolitical things, all of the heightened risk because of that and overnight gap risk, I'm not interested in that. So I'll go in, I'll take surgical strikes, know what I'm looking for, get it, and go home. That's the only thing I'm doing anymore. I'm older now. Um, I'm more risk averse. I don't want to have all that concern for the outcome of the trade. I'm not that young guy anymore. So I just know what I'm looking for. I'm waiting for it, and then I'll pounce on it when it's there. So I think I'll hang out with you until we get to 8:45, and then I'll break from it. It's, I understand team mentality. I understand there's people out there that sell their stuff. They have a way of that they want to market, but marketing against me is the worst thing you could ever do because I'm going to get your subscribers. They're going to see that what I'm showing, what I'm doing, what I'm teaching, what I'm giving away for free, it blows the shit out of the water. That whatever you're selling, whatever you're hawking, whatever it is, I don't care what it is, who it is. They have all failed. Okay. They've always failed. When they come in, they start doing this stuff, their sales fall off. They get exposed as unprofitable. They get exposed as a scammer. They get exposed as not as good. They get exposed as a toxic personality. And it's very, very, well, nobody's interested in that shit no more. There's enough going on in the world. Things are too expensive. Nobody really wants that. They want to be uplifted. They want to be inspired. And drama marketing, okay, that stuff doesn't work. It doesn't work, man. Not here, it don't work. I will send your video links to other people so we can all laugh at that. Okay. Does that look like I'm worried about it? I'm not worried about none of that stuff. There's a guy out there that still has shit on the internet about me and all horseshit, still trying to sell his shit and can't do it. That's the facts. And here we are looking at live streams talking about where the market's going to go perfectly using the stuff that I already taught for free. That all you have to do is simply watch the videos, take notes, and then go into your charts and study it. And you'll see it's boring. I'm boring. It's exactly how it's supposed to be. But because it's so boring, I have to show showmanship. I have to create some kind of tension so that way it engages the audience because this is boring. You wait for this to form. When it does, you check and see if it does it respect that range to this degree. Is it going to move in this direction? Where should my stop go? That's boring stuff, man. That's boring. I would not have 2 million subscribers and all of the interest in what I'm doing and teaching if I first didn't do the things that I did. Talk about it, how it's sniper related. Well, what target audience am I looking at? Male. Male. Okay. That's why the ladies were interested in me because I sounded like I was talking about Rambo and Arnold Schwarzenegger narratives. But it's to hook your attention long enough so that way you can say, okay, what is this guy really talking about? And then they get in there and they start using the concepts. And if you're weak and you're impatient, they are not going to work for you. That's not a knock against the concepts. It's just highlighting that you aren't disciplined enough. You haven't put enough time into it. And then you see the weak guys, soy boys, they say, oh, yeah, I did this for 2 years and I was never profitable. You were doing the wrong shit for 2 years. That's what you were doing. You were doing it all wrong for 2 years. You didn't listen to the things like I'm talking about right now, where you have to slow down, defer your expectations, defer it, put it down the road a little bit. Because if you put a timeline on it, if I don't learn how to do this by this day, get the hell out of here. Go. Get out of here. Go. That's the point of Ed Sekota's little parable he mentioned and included in his book, Through the Trader's Window. The Jade Master. You know, the young guy goes and wants to be a Jade Master. And already, I know some of you are wanting to turn this off. Good. Get the fuck out of here because you're not ready to do this. You're not ready to do it. This young guy travels a long time to find this Jade Master that everybody said, if you want to learn how to be a Jade Master, this is the guy you go to. You got to travel a long way to get there. That's like you going through all this retail shit. You got to wade through all that garbage. Everything sounds like it's the winning thing. And you come to a guy, he says, hello, answers the door, and the young man, which is proverbially you, yeah, I want to learn how to be a Jade Master. I want to learn how to read price action. Oh, go on in. And you sit down with him, you're expecting him to start showing you candlesticks and expecting you to know where to buy and sell. And what does he do? The first thing he does is gives this young man a green stone. presses it into his palm, and tells him to hold on to that. And he starts talking to him about everything but Jade. And then he tells him, "Hey, look, you know what? You could be doing this over here." And hands him a broom. Starts sweeping my house up. What? Man, I did not come all this way, spend all my time to listen to you, old man, and then you're gonna ask me to clean up your house? What? Man, I'm out of here. See you. And on the way home, halfway home, he's already doubting. Was he too impulsive? Did the Jade Master stop and say, "No, no, 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 please don't leave. I need your online support. I need you to like me online. I need you to talk about me in the positive light." No, he didn't do that at all because he's the Jade Master. He knows his shit. He knows that everybody's going to want to come to him to learn how to be that master of Jade. So the next week, young man makes that same travel right back to the old man's house, knocks on the door. "Yeah, it's me again. Can I get a second chance?" "Sure. Come on in." And once again, he takes that green stone and presses it into his palm and starts talking to him about tree frogs, harmonic patterns. And then again, it comes over him again. He's like, "Look, look, 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 you're doing it again, man. You're doing it again. I want to learn about SMC. I want to know which fair value gap to buy, which one to sell. When is it an inversion fair value gap?" And the old man says, "Go home and come back next week." Oh man, this guy's tore up now. He's like, "What? Piss off, old man. I'm going." And heads home. All week long, he's thinking, "Man, I messed up. I messed up. I messed up." And this goes on a few more times, but less and less he interrupts the old man until one day he's back there and he says, "Look, you got me sweeping, you got me cleaning the cupboards, you got me wiping down everything. And I don't know anything about Jade. And I've been coming here and listening to you drone on and on and on. And I don't know anything about Jade. I came here to learn Jade. I want to be a master of Jade." And the old man tosses him a green stone and he catches it in the air. "Here, hold this piece of Jade." And when he grabs it out of the air and feels it in his hand, he says, "This isn't Jade." And the old man smiles. Most people miss it. But the highlight is this: when you're brand new and you think you know everything and you think you need to learn a certain way, that means you're the master pretending to be a student. It doesn't work that way. When you go to someone that knows something more than you do, and this is not just limited to trading, anything, you got to respect your elders because they know how to teach you. But your impatience, your entitlement gets in the way. You want to learn it by this time. You want to learn it this way. This is the idea you thought it would be to learn it correctly. When you don't even know what the fuck you're doing. You have no idea what you're doing. You have no idea what you're about to learn. You have no idea what it means, but there's all kinds of logic. So that man was giving him discipline and patience while learning what real jade feels like in your hand. That's what backtesting does. Backtesting shows you what real jade is. So when you start watching these candlesticks in live and you're tape reading it, you can see when that move ain't real, when it's fake, when it's false, and you can see what they're doing beforehand. And then you are a candlestick master. Then you can read the tape without me holding your hand, without me pointing to anything, without me ever making another video, because you have done the work of holding real insight, smart money concepts, the logic behind them. You have that in your hands while watching old price action. And it conditions you with patience over time, listening to logic that's going to prevent you from self destructing, which is why I talk to you a lot. That's how I teach. That's how everyone that's become millionaires as students of mine, that's what they endured. That's what they took away. And every single one of them will be honest and tell you, if they're honest, they'll tell you, say, "Look, in the beginning, man, He talks too much. He does this, he does that. He doesn't get to the point. Yeah, I do. And they later find out that was the point. I'm slowing you down so that way it gets you out of the way. It teaches you patience. It teaches you to observe what real market precision looks like, what turning points are going to exist. Where is it coming from? Where is it going? When should it move? When is it fake? When's it a false move? All those questions are answered, but they can't be answered in a simple statement because you're not going to appreciate the gravity of what I say because you haven't tested it. You haven't looked back in old data and say, yeah, that's exactly what is happening. It's happening. These things happen all the time, but I never noticed it. Why? Because you're looking for the thing that puts you into a trade right now. Give me a trade right now, or you're a fraud. Go fuck yourself. Okay. That's my response to all of you. When you have that mentality, you're broke. You're going to work or you're in between jobs. You're miserable. You're online and you want someone to jump through hoops for you. I'm not that guy. But I'll pull your strings and I'll pull your card and punch your ticket when it's amusing for me to do so. And that's because I'm entertained by it. My feelings are not hurt. I'm not upset about that. In fact, it just proves what I've already told all of you that are so concerned about them changing things. There's always going to be suckers coming in believing in this horse shit that retail teaches them. There's always going to be people believing that. There's so many books out there, so many personalities still going on about stuff that are outdated and archaic. Look at what I'm showing you, folks, man. Seriously. Take me out of it. I'm the least important factor in all this. It's perfect. Why would you look for anything that's promising you something that's good when I'm showing you what's fucking perfect? It's perfect. To the tick. You don't find that in anything else. You don't find it because if it was there, man, they would be slamming my timeline on X saying, look at this and look at this and look at this and here's what I'm going to do. This is what it's going to do next. And then here it is. Here's the receipts. You don't see that. You don't see it. But they'll use my name and punch you in the face, try to get your attention, say, remember how ICT is a scammer? Remember how he did this? And remember how he said he was going to do that and he didn't do this? And I'm out here live streaming telling you what the market's going to do. Are you forgetting that? Selective memory, amnesia? Like, what's the deal here? That's me playing with the audience. I troll my haters. I enjoy it. That's why I never had to advertise. That's why I never had to advertise. I never paid for advertising. I would step right in front of them like David and Goliath, and they had a bigger following than me. And I said, your shit stinks and mine's better, and I'll prove it. And I did it with a demo account, which made it perfect amusement for anybody watching it. But then they shut up because they couldn't do anything like me. With a sling and a stone, I knocked them all off. And they like to use the things that I stunted. I made fun of things. I made fun of people and I trolled and they take things out of context. And it's so fun to watch them still go on like they think they know me. You have no idea who I am. You have no idea. But it's fun. On this side of the storyline, it's fun because these people that are trying so hard and desperately to sell things to you, they need your money. They need you to hate me. They need that to happen. They need to be viral that I'm a fraud and scammer. They need that to happen because so many people are learning how to become fucking rich for free and beat the shit out of this market for free. They can't have that. That's why I told you there's going to be this collective that will come and it's going to be everybody that sells shit because they need to sell it. They need to sell their software program. They need to sell their fucking plan. They need to sell their little gimmicky bullshit, their courses that's really diluted my stuff. Think about it. How else can they live? How else can they make their money? They have to market their stuff. They have to sell stuff, right? And that's why they do it. And they know there's always going to be people that doubt because you're weak. You won't spend enough time doing it, right? You're going to look at it and, oh man, this is really complicated. There's a whole lot of videos there. When here's all you are doing, okay? This is the core tenet to what it is I teach. You ready? You're looking for a market, whatever market you want to trade, it doesn't matter what it is, okay? Whatever you want to trade, it works in everything. So stop your bullshit. It doesn't work in gold. It doesn't work in this. It works in every fucking thing. Everything. It works in everything. Crypto. I've never used it. I don't have the evidence to say that, but I have students that made millions of fucking dollars trading with it. How many millionaires is the guy you're listening to has he created? There's your litmus test right there. How many people have made millions of fucking real dollars with the horse shit that they're selling you? There you go. That's your litmus test. Period. Forget about me. Don't ask me. Is it something that you can learn to do? Forget what I make. It doesn't matter what I make. You'll never make that much. You are learning something that's either transferable knowledge or you're not. And if there's people learning it and they're doing it and they're making millions of dollars, is it worth your investigation and push effort into that and block out all the other horseshit? To me, I think it's a no brainer. Now we're back in a new week opening gap high. These look a little too suspect in here. So if they really want to come back down, upset that, and then slowly work towards gravitating higher later in the afternoon, that's something I would be interested in seeing if it can do it. But the idea of learning from anybody or buying their horse shit, whatever it is, show me someone that's made millions of dollars with it. And you're going to see them do all kinds of defensive maneuvers. They're going to they're going to cuss you out. They're going to say you're an asshole. You're a cult member. You're probably one of those dumb ICT guys. You're drawing those rectangles on your chart, blah, blah, blah. Okay. Meanwhile, where's your millionaires? Back to the question. Where's your millionaires at? That's the question. That's the question for 2026. Where is all the millionaires at? Because if you're only showing what you made by selling your horse shit, buying your cars, buying your boats, buying your horse shit watches, okay, that nobody gives a shit about, they're ugly as fuck, okay? All these things don't prove any benefit to your subscriber base using what you're doing. Think about it. I got my own brokerage firm. This is all the money I made. This is just the statement number here, but you didn't watch me make that balance. And I will never go into a CFTC regulated brokerage firm and do it anywhere else. Well, that's suspect, isn't it? That's suspect, isn't it? But they're going to counsel you on what you should do when they're not telling you what the market's going to do beforehand with detail that is repeating logic. Think about it, folks. I mean, this is really a litmus test for you. It's an IQ test. Are you fucking stupid? Are you stupid? Because if you're giving your time of day to any of these jokers out there that have a price tag attached to anything, you work for them. You work for them. You're Carl now. They they employ you. They hook you for your attention. They get you watching their horse shit, and eventually you'll put a hand in your pocket and you'll pay for whatever they're selling. And you'll be no better off by having done so, except for regretting it. That you'll look back and say, "Ah, I wasted so much time and effort and energy and money, and it didn't work. I bought into the hype. I bought into the image." The only image around here is precision, predictability, consistency, continuity, honesty. That's the way it is around here, folks. If it ain't working, then you know it's a fraud. If I can't talk about it before it happens, then you know I'm a fraud. And the logic that I taught, and students that dug their heels in, rolled their sleeves up, and said, "You know what? I get it. ICT, he likes to stir the pot, and that was his marketing strategy. It worked. I'm at 2 million people because when they come here, they see shit that they can't find anywhere else. And they look past the personality. The personality, the marketing aspect, the engine behind me, the inner circle trader, it was me causing doubt. Because if I got some of you to fall in love right away because you paid attention, because of the concepts working, I don't need to work on you. I'm now after the people that want to talk hate, and I'm going to convert them. Not every one of them, but I got a lot of them. And a lot of them secretly love me. They got pictures of me next to their nightstand at nighttime, and they have to hide it when their wives come in. Ooh, yeah, that's how it is. And I don't mind. The bromance is cool. It's cool. But the bottom line is this: I know how to work an audience. You have to divide them first. Divide and conquer. I already know that people with a brain are going to realize that this stuff is superior to everything else. I don't need to cater to you. I'm not defending myself. I'm having a lot of fun by bringing in more people. And it's the people that hate me because they borrowed that opinion from somebody else that they look up to at the time. Oh, I've watched you do this and I've watched you that, and you're the goat. You're the goat. You're the goat. Oh, you're that ICT guy. And he made fun of him. He's making fun of you too. Yeah. You look. Oh, what? What did he do? He called a low, and he went exactly where he said he was going to go. Oh shit. Maybe I should delete that post about that, because if someone screenshots that and throws it in my face later on, I'm gonna feel like an idiot. Yeah, that's what happens. And all of a sudden, I get emails. Like, I got emails overnight. Damn, bro. Like, I was part of that train. I was part of that train, man, hating on you, and I didn't even really know what you were. Like, I just believed all the bullshit that people put out there. But that what you just did yesterday, I watched it. I didn't see it live, but I watched the recording. I can see it's a live stream recording. Bro, that's something different. Exactly. And that's all I've ever done. That's my marketing engine. That's what I do. I'm not I'm not out here defending myself because I'm sleepless, because I know it works. And some of you that don't want to see it, I get it, man. It sounds like a broken record, or you think I'm arrogant or narcissistic. I'm really not that. But I play that part, just like Stone Cold Steve Austin in wrestling. That's his gimmick. That's his persona. That's what he uses to sell his whole thing, his merchandise. Okay, they're not getting paid because they're wrestling. They're getting paid because they sell their T-shirts and whatever thing else. I'm selling you this information for free by hooking your attention, getting you here long enough so that way I'm making you emotionally connected to it. Either you're here to find something I'm doing wrong so you can talk about me, but you can't find it, and you're struggling. But then in the process, you're seeing me do shit nobody else can do, using the things I already taught for free, and then you're stuck. And I have the people that love me and they're making money with this stuff, and they're like, dude, man, why you even give these people this time? Because that's how I got to 2 million fucking subscribers. That's why. I know how social media works. I know how your brain works. I can say one statement, and both of you, the hater and the lover, will find solace in it and feel like yep, he's talking about me, and he's finally admitted that this, that, and the other thing. And neither of those things would be true. It's market manipulation. Market makers do the same thing with these candlesticks. They make you think you got an opportunity about being right, and then they slip your stop. Done. You're lost. That is control over the audience. That's showmanship. So while I have a skill set, I have something that's transferable knowledge, I engage my audience in a way where I immerse them in an emotional response. Either you're willing to go to war over me, or you want to come here and sling rocks. Either way, I'm happy. Either way, I'm happy. Not because of the drama, it's because that you will spend time here long enough and I will convert you. I'll show you that your Mickey Mouse horse shit doesn't work nowhere near like this. And that little bit of doubt, the first time they see it, it's in there, just like a grain of sand in an oyster. And that little soft belly of that oyster, it can't get that grain of sand out. So it starts secreting more and more and more and more, and it just gnaws at them. And all of a sudden, they realize there's a pearl of wisdom right there in their gut, and it's good old ICT. And they come back and they send me emails, and they'll say, "Man, this is this is a hard thing to swallow, but hey, I'm a man. I used to make fun of you. I used to make fun of the stuff you're talking about. I used to say this, that, and thing. I just parroted everything else that everybody else said, but you did something that got my attention, and I just quietly looked at what it is, and I just took out $85,000 in a withdrawal from a live account, not prop. What do you do with that? You parade around the house and say, "That's why you do it. That's why you do it, ICT." And it's fun because I take ugly people and I turn them into positive people. and I do it in an unorthodox way. That's what I do. I'm not out here trying to get you to be clones of the ugly side of me that markets. I'm out here trying to get you to be the positive role model for your family using what it is I'm teaching. But I have to build an audience. I have to get that audience there. And what I do is I create an atmosphere where you suddenly find yourself caring enough to be involved, and I start a riot. And that's what I've done. I was a virus and I infected this industry. And this is what my whole plan has been, is to get all of you to pay attention. But there is no malware for this now. It's out there. People know about it. There is no virus scanner that's going to remove me because everybody has it now. They have it. I'm no longer the important thing. They can't stop it because I've already released it. It's in there. It's in the source code now, and nobody can take it and remove it. It's common language now. SMC, this, that. They may not know me yet, and it's not important. It's really not that important. Me is not that important. But where it came from is, and it ain't from anybody else's lips or their books or their courses or their videos or any person face-to-face mentorship. No man taught me this stuff. Not one man taught me this. And my question to you is, if it wasn't the Lord, how else could it be so perfect? He's not the author of chaos. He's not. But he put everything in motion perfectly, perfectly. And you see it here. You see it. So I'm going to spend the rest of the week. I'm not going to be with you the rest of the week with any kind of charting or anything like that or live streams. I just had an opportunity to do this yesterday and had a small little window of time to talk to you today. And hopefully, for the folks that think you understand me, and you're the ones that go into other people's channels or their posts and you say, yeah, that ICT, he's a scammer. And remember that one time? Remember that one time he did this and he did that? You have no idea. Like I like make puppets, marionettes, like on a string. If you're talking about me, you're keeping me relevant. And that's going to cause curiosity in everyone that sees your post about me. And that's exactly what I've always controlled, the narrative. I get you talking, then you come here and you send the people that follow you. You're going to influence them because they want to come here and see a train wreck. That's what they want to see, and it's hard to look away from a train wreck. So I create that environment, and you want to come here and see the guy that's going to fail and flounder and look silly, and all he talks about is a demo account. Yeah, and then what happens is they come here and they see something that's like, what the hell? Yeah, surprise, motherfucker, because that's what happens. It's guerrilla warfare. You're getting ambushed, ICT style, bushwhacked. That's how it works. And for the people with the intelligence, they have seen this all along. You'll see them. They'll say when people are complaining, like, "Look at," their response is, "You're new here, huh?" It's the same pattern every year. It's the same MO. I do the same stuff every single year, and here I am at 2 million subscribers. No advertising. I never had to pay for ads ever, ever. Because if the product works, if the product's good, you don't need to. Word of mouth will get it. And all I had to do is get it, put it in your hands, and then control the narrative. Done. That's understanding human psychology. That's understanding real supply and demand factors. Yeah. That's me using the real pitchfork and sticking it in the ass of haters and making them work for me. Okay. That's what that is. So I guess in a way, you can call me the GOAT, greatest of all times in marketing, because I did shit that nobody else has done before. And I built a huge audience, and I've made millionaires, and I've made people find worth and self worth in themselves because they have been empowered with a skill set that no person can take away. No person can take away. They can't talk down to them anymore. They can't make them feel defeated. They don't feel like a loser anymore because they have the ability to carve out their own paycheck. They can make whatever the fuck they want to make, and nobody can say otherwise. They ain't worried about whether their job's going to say, redundant, we got to get rid of you. They don't care what gas is going to cost. They don't care how much groceries are costing. They don't care about the utility bill. Speaking of utility bill, by the way, did you see your utility bill for December? It wasn't really that cold here, but it was almost double. And you know what? I didn't care so much about it until my wife asked about it. Did you notice this? Oh, yeah. And that was it. I'm not worried about that. And when you have this skill set, you don't worry about things like that. You don't worry about how much things cost. I mean, I got to buy new clothes. And people are going, oh, man, they raised the price of. Is that what's going on? Uh. But I can see groceries because I'm the one that goes to the grocery store and I'm the one that swipes the card and pays for them. And I can see how it's gone up. I'm not losing sleep over it. But I do think about all of you that are struggling, just trying to find the way to make your ends meet. And you're a single parent, you're a working parent, or you are part of a marriage that is just struggling because things have gotten so far out of whack. I feel for you. And I hope you understand that what I have been doing is meant for you all along. It's been presented in a way where this is the best way. It's a lot of information because I want you to know everything that I'm willing to teach. It's not because I'm trying to bog you down. I want you to know everything. I want you to understand where you're going to mess up. I want you to understand how you can shorten the curve by how you think. If you think you're entitled, that has to break before you grow. If you think you understand how to be taught, that needs to be abandoned or you won't learn. I promise you they're the truth. That's the truth. And those are the two primary things that prevent people from learning, not just from me, but from anyone. If they have something that's transferable knowledge, a skill set, information, some kind of a process, anyone that comes to them with an idea on how they should be taught, they're not teachable. They're like that young man that came to see the Jade Master. He knew everything. He thought it was going to be easy and fast. He should have it fast because he spent the time walking there. You owe me, old man. And just like that old man didn't owe him shit, I don't owe any of you nothing. I've already given you more than any motherfucker on this planet would have given you. And I'm giving it to you for free. And I'm still here for free. Nothing. Period. I'm going to say something to you and I'm going to close it. Um, Jesus Christ is absolutely Lord. I'm a sinner. And when I close this, I will be repenting for the things I said. I do it all the time. Okay. But I want you to understand something. The moment I brought his name up on this channel, everything that this channel was earning was cut in half. 2 years ago, when I made a post on the community post and I gave glory to God and Jesus and noted that he's risen, immediately the views fell off, despite me getting 50,000 average new subscribers every single month. Okay. I want you to know the state of the world. Okay. And I want you to know, YouTube, I don't give a fuck if this YouTube channel makes money or not. I don't care. I'm still going to do it. I don't care. But because I raised his name up and I exalted his name, they punished it. They punished this channel. Okay. I have increasing numbers of people coming to the channel all the time, but the views are never accurate. They're never accurate at all. Zero. Why is that? Twofold. Number one, I'm giving God the glory and the praise. And two, I'm also teaching you something that you're not supposed to learn. They don't want you succeeding. They want you to be a good slave. They want to punish you. If you don't do what they want you to do, they'll take your ability to make money. Fuck you. I don't need your fucking YouTube money. Okay. I don't need ad revenue. I don't give a flying fuck how much money YouTube ever fucking pays me. I don't give a fuck. I don't give a fuck. I don't give a fuck. Okay. I don't need to do anything ever, 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 ever. Not one thing, not a trade, not a YouTube video, nothing. I don't need to do shit. That's why I spend the majority of my time on X where I'm not monetized. It's quick. It's just like you're a buddy of mine and you're in my circle of friendship. And then I send you a text message. You're all getting it the same way and same time. And I'm not monetized. They're asking me now, hey, do you want to have a partnership and start making money? Because they see the impressions that I do when I put something out. I'm not monetized. And if you don't believe me, bet me, dare me, come out and say, you're getting ad revenue off of X. And I will log into the profile and you will see that the shit ain't there. Period. So I do this because I love doing it. I'm not doing it because I make money. I don't live off of ad revenue. I promise you that is shit money. It's garbage money. I pay my landscaper and my utility bill alone more than I earn every year off of YouTube. So make that math. It doesn't work. Okay. You're spending time worrying about things that are completely stupid, irrelevant to you, learning how to quit your job, live well, be content, free up time to do everything and anything you want to do. Because the life that you're living right now, whether you realize it or not, is about to get very hard and very expensive. Are you ready for that? Are you ready for it? Or are you content with, I'm not worried about it. Spiritually, I'm not worried about it. And financially, I'm not worried about it. So that's a good state of mind. And my hobby, my entertainment, my passion is to come out here and infect all of you with this mindset that walking daily in this world is not a fearful thing. It's not a defeating thing. It's not something that you should stress over. How easy is it for you to fall asleep at night? Are you losing sleep? Can't fall asleep? You're stressing. You're overthinking. You're feeling rushed. You have to do this real fast. I promise you, you don't. You need to slow down and you'll realize slow is fast. Slow is fast. And trying to put all this on top of you and think, I got to consume all these videos because they're going to change something or it's not going to work or I need to make the money real fast. That never gets you there. It takes you the other direction very, very quick. But here's the central core tenets. What I teach and what you're supposed to be focusing on is this. You're looking for a market that you want to buy or sell based on some higher time frame premise that leads to a direction to a very specific price level. An old high or an old low, singular, or relative equal high or relative equal low, or an imbalance above price or below price. And all you have to do is check what just recently happened. Was there a stop hunt? Did they raid the sell side? Okay, if they did that, look for some kind of a premium array. First, imbalance, because it's going to be inside of the range, it's going to climb back through. Then, is it a single high or relative equal high? And you do the same thing if it ran buy side recently. Is that complicated? You're met with three choices. Okay, it's multiple choice. It's this, or that. It's not all three. It's not two. It's just one of them. Once you arrive at that, then you go down to the lower time frames and you wait for a first presented fair value gap where I tell you they're going to form. I've taught you several of them. That's a finite point of reference. It isn't shifting and moving all around. It's not hiding from you. It's very specific information. The fair value gap has to displace. It has to be significant. It can't be just little common gap. And you use that as a point of entry. You use the first candle to use for stop placement. Along the way, you have already determined where you would take a partial. If you can't do partials because you're only trading with one contract, fine. Then you need to know where you're going to move your stop, graduating it, moving it, protecting whatever it is you have in terms of risk until you get inside of profit, unrealized, and then you manage it to the end of the trade. That's not hard, folks. That is not me complicating anything. What complicates it is because I have so many tools, so many ways for you to do that very thing. It allows you as the student to go in and say, I really don't like order blocks because there's so many down closed candles. I don't know which one's the right one, and it's uncomfortable to me. I get anxious about it, but I can see the fair value gap. I can see it when it forms. He told me the time at which to look for it, and then I'm going to use that. I can see that relative equal high. Also, the daily chart looks like it's moving higher anyway because it's just recently ran out sell side, so it's probably going to go higher. And I'm going to only operate and engage price going higher and going long. So fair value gaps, I will look to go long on. Is that complicated? Because that's exactly what I've been teaching. Now, if you're thinking, well, I got to look for the inversion breaker, and I have to do that inside of model 2022, and only if the COT agrees and its seasonal tendencies also in line, and market structure has to be a certain way inside of a market maker buy model or sell model. What the fuck, dude? Like you're literally going in and you're trying to do everything a kitchen sink approach. You never see me doing that. You never see me doing those things, okay? There are tools that help you determine a bias. There's a tool that gives you timing, entry and exits. There's a tool that confirms or qualifies the setup. In other words, it builds another level of confluence to it. It isn't one thing only. It's not a one candle premise. That's what you're seeing now. All you need is this one candle. No, you don't. You got one candle to lose your ass. Okay, that's what that is. If you're stripping your logic down to just one candlestick and that's all you're doing, you're going to get railroaded. Period. You have to have supporting logic. You have to know what you're buying, where's it going. You have to know where the stop loss is going to be, and you have to know how price is going to work inside that range. And once it leaves that range, is it worth holding or is it going above to reverse and go back down or vice versa going long? You have to have other supporting actors along with that plot because the one candle, as much as you want to make that the starring role, the leading man in your narrative, every leading man has to have supporting actors. The best plots have a supporting actress because there's that dynamic, that sexual tension, that chemistry. Without it, you have a joke, you have a comedy, a tragedy in the making. But if you want a blockbuster plot that turns into a mega hit at the box office and it makes lots of money, you have to have a narrative in your trade that your single premise that you're entering on has a lot of supporting actors around it. Market structure, sure. Seasonal tendency, sure, sure. They're supporting roles, but they all don't have to agree. What do I mean by that? Did I confuse you with it? How are you going to time your trade? Like what gets you in the trade? Well, the fair value gap. You buy the fair value gap high or upper quadrant level when it's bullish. Don't try to get the lowest low. Don't wait to get to it. Just look at my executions. You'll see me doing that. Because many times it'll go down there and just touch one tick into the high of it and it won't go any deeper. And it runs away real quick. And here you are sitting with your limit order at the consequent encroachment or lower because you're greedy and you want a better fill because you want to do more contracts because you want to use a smaller stop loss. Stop thinking that way. The volatility of the market the markets right now are making it difficult to have very, very, very small stop losses on all trades. There are times when it can be afforded, but predominantly it's a knack thing. It's an experience thing. You have to know when to do it. And if you ignore that, you're going to over leverage your account trying to make a lot of money real fast and get to the end game. Because you're thinking, if I get a big payout, if I can make that milli, I'm done. You won't be done. Even if you do that, you'll still continue doing things like that because it's rewarded you. And the eventual thing's going to happen. You're going to get clipped. And some of my students, they were trading very, very well last year, had that happen. They lost the plot. They got punch drunk and they forgot the process and they were chasing the profit. They were trading their equity curve. They were trading their trading balance. How much can I make more today? And I'm telling you that always does a trader in. You can get good runs in the market, and I did this. And all of a sudden, because you're so worried about the outcome on the monetary side, you're trying to get a number. You're trying to hit a number in equity. You're trying to reach a certain number figure by a certain time. That's gambling. That's what that is. And you need to be told that with sincerity. I'm not trying to talk you down and trying to keep you from making money. You can make all the money in the world, but you don't need the over leveraging. Small positions consistently eventually will grow. But going in there and trying to risk 20% of your account, come on, man, that's nuts. That's nuts. You can only do that a few times before it wrecks you, and then you won't want to take any trades. So the key is for you to balance you doing these things. And when you have adversity, which is normal, that means you're going to get stopped out. It means you're going to get drawdown in the trade more than you're willing or expected initially. So if you're doing it with the least leverage, you won't feel the problems of over leveraging would cause. You're not going to second guess it. You're not going to doubt your model. You're not going to doubt your trade. You're just watching it and sticking to what you initially thought was going to pan out. And it ain't going to hurt you. If it doesn't, if it stops you, it doesn't hurt you. It doesn't make you feel like I don't want to take the next trade. In your mind, before you even scale up the size of the contracts you're getting ready to trade with, the number one question you need to ask yourself, and I'm going to close it. If I lose on this trade, how eager will I be to go in and take another trade? And be honest. If you lose this much money, how comfortable will it be for me to take the next trade? If you get nervous, if you get a little tense in your chest, a little tension in your hands, you start tensing up a little bit. You feel uneasy about it. You're over leveraging. Now, there's going to be a time when you have done so much over leveraging and you become numb because you're losing. Now you're in that loser cycle. That's what gamblers go through. That's why they sit there and they just want to lose. They don't have the ability to stand up and walk away with what they have left. They just want to lose it all. I don't have control. I lost every bit of self-control. Please just let me lose it all. I can't stop myself. Just let me lose all the money so I can just stop because I can't stop without losing the money, without blowing the account. I can't walk away. If you find yourself feeling like that, it's hard to get out of that. So the key is to never get there. Never enter that loser cycle. And the way you do that is never over leveraging and always confer like a board meeting. Okay. You're running a corporation. You're the CEO, you're the CFO, you're everything. You're the board. And before you put your trade on, you need to ask yourself sincerely, this trade, the size of this trade, if I lose this trade, how eager, how comfortable will it be for me to take the next trade if it were to happen today? If you're uneasy by that, or if you're obviously aware that that would really hurt, you're over leveraging. I have never over leveraged on a trade and did that when I was 20 years old. If I could go back in time, that's the one thing I wish I could tell myself to do. And that would have spared me a lot of fortunes because it's very, very hard to overcome that scar tissue when you have it. And when I look at markets and I go into a trade and I'm watching certain things, I have all these old moments pop up in my head. But I have to tell myself that was when I was reckless. That's when I didn't know what I was doing. I recognize that this is very similar to that, but I have a trade that's scaled properly. I'm not over leveraging. And if I take a loss on this at full stop, I'm not deterred by taking the next trade. I will still go in with the same logic because this is just part of what I'm doing. It's a cost of business. I did something wrong. I did the error. It was me. It was operator error. It was not model error. It was not anything apart from me just simply doing it wrong. And I'm okay with it. I will pay that price. It'll give me intel. So I'm going to pay a premium for being wrong. And there it is. I move forward. Do you do that with your trading right now? Because if you don't, start implementing it. And I promise you, the effects of drawdown when it comes, and it will have far less impact on your psyche and your trade psychology and the effects of the ebb and flow of winning and losing, winning and losing. It will have far less impact and less detrimental to your ability to follow your model or take the next trade. Your model is only as good as your ability to implement it. And if you don't have a way of freeing up your mind and not worrying and wrestling about what the outcome is going to be, you're not going to succeed, and you're going to have a terrible time doing it. You're going to want to quit. You're going to want to have these big windfalls so that way you can say, "I'm done. I've made money. I'm not doing this anymore because I can't stomach it." If that's how you feel when you're trading, if you feel worn out, if you feel like you're completely fatigued after taking trades, and even if you made money, you're over leveraging. You really that's the clearest sign that you're over leveraging because if you've made money, you should feel happy. You should feel elated. But what happens is, and this is the science behind social media and trading, okay? Individuals that don't know how to trade, individuals that recklessly plunge ahead and they do over leveraged trades, when they do make money, they have a highlight reel they'll bring to the social media. And what that does, it's like an ointment for them. It soothes the burn that they felt while going through that and being able to pry that profit out of the market's hands. And they look for people to like their comment, their post. You're the GOAT. You're the best to ever do it. And that rewards you. It gives you that dopamine hit that soothes your nerves. Because in reality, your ass hurt because you knew what you just did. You just got out of hell just in time before the devil knew you were there. You just stole from the market and you barely got out alive. And yeah, you have a profit, but you know damn well what you just did was just happenstance and good fortune. It wasn't skill. It just happened to be a good rain day. Okay. You got wet, but it didn't flood you. You were refreshed on the outcome, but you don't feel refreshed because you feel like you ran a marathon with somebody on your back barefoot. You're worn out. So you turn to social media to soothe you. That's what they do, guys. That's exactly what they do. And some of you are hating me right now because I just nailed and pegged you. You're like, shit, that's me, man. That's me. And my advice is stop doing that. Because what you're doing is you're finding ways to soothe the corrective feeling that you're feeling. You should observe that. Say, okay, you know what? I uh I agree with that statement, ICT. I won't admit it publicly, but I agree with that, and I've been doing that. So what I'm going to do is pay attention to that, observe it, take note of it, and then learn from it. I'm not going to put myself in that situation because I can see how I'm rewarding bad habits and I'm only enabling poor thinking and poor choices. You're an enabler. When you go to the social media and you show your winning trades, but you're not showing your losing trades, you're not showing the gravity of how hard it was to be in that trade. You're just showing, here's my profits for today. That's usually a telltale sign. You probably just fucking got through that by the skin of your teeth. Like you just found a way to survive it, and there it is. This is what I closed out. That's why I don't ever go to people's posts like that and like even if they give me a congratulatory like thank you ICT for this, I usually don't want to do that because I know probably what they're doing is they feel this. They drug themselves through this trade with denial, and it just so happened to allow them and to afford them an exit, which looks profitable from the bottom line perspective. But if you look at the execution from where it is and where it went, where they got in and where they got out at, that's the real storyline. And they could have been sitting in thousands of dollars in drawdown for days. So just showing the numbers, that's not enough. And if you're students of mine, you need to listen to that. I'm telling you that that's the wrong way of doing it. I would want to be told that because what you're doing is you're enabling yourself to stay in that loser's mindset because that's what that is. You're in a gambler's mindset. You're trying to soothe yourself and reward yourself because you're only looking at the outcome having you made money. Yeah, yeah, you can talk all that shit you want, but I made money. Keep doing what you're doing and you won't have any money. You're in this to learn how to make money, not once in a while get through a trade and profit. You're not here to be on social media to be liked by your trade executions. I said this last year, the best thing you can do is get the fuck off of social media. How many decisions have you made in the last 24 hours that have to do with social media? Man, I hope I can do something because I want to be able to post this, or I want to be able to respond to this guy or that gal, or I want to do this and I want to do that. It's consuming you. How much time are you wasting on social media? And the only thing it's doing for you is rewarding toxic thinking, stupid time wasting things. It's not making you more money, even if you are getting engagement, whatever it is that X pays out or ad revenue on YouTube. That's minor. That's like little minor league stuff. But you're thwarting, you're standing in a way of you making real money, serious money, and having fun and being comfortable while doing it, not being reckless, not being fearful. You're sleeping comfortably at night. You know what you got is going to work in the future. And if you have a loss, it's okay. It's a scratch. It's not going to hurt me. I'm not going to blow my account. I'm not going to break the rules with the prop. When they say you can do 15 and 30 contracts, trade one. Trade one. Make enough money for you to put it into a real brokerage firm and stop trading prop because that shit's doomed. I'm telling you right now, and look it around. All these companies, they're pulling shenanigans, they're changing rules. They don't want to do this. You can't do that. And you want to risk all of your hopes and dreams on that. While they're here and while you can fleece them, do so. Do it controlled. Do not try to rush to make lots of money. Go in there, play by whatever the fucking silly rules they have with one contract, make enough money, and put it in a discount real brokerage firm. There's several of them. They're reputable. They're regulated. You can get your money out as soon as you make it. Do a wire, there it is. If it's too late in the day, you'll get it the next day. That's what you're supposed to be doing. That's what you should be doing. And if you haven't been told that, now you have. That's what you're supposed to be doing as a trader, making money, controlling risk, living your life peacefully, not trying to be an adversary to somebody else, not trying to be the upstart that shines like, wow, look at this person. Because as soon as you start doing this, young men, okay, this is exactly what I went through when I was coming up. Because I came from no money, because I am from an area where the least of expectations were placed on anyone from where I'm from. When I had a taste of success and people were giving me notoriety of it on America Online and Internet Relay Chat, I had this sudden success and people suddenly recognized who I was. And because I didn't have that growing up, I tapped into that and said, that's what defines me. That's who I am. So forget how much money I'm making and how well I'm doing. That's not the point anymore. The point is I want them to make me feel good about me. So what you do is you start chasing that and you start looking for things to upstage the last thing you did. That's very hard to do. It's very, very hard to do. Try to upstand and outperform everything you ever do the day before and see how long you can do that. And before long, you're going to feel defeated. You're going to feel like you're making no progress because you're doing something that's an Olympic feat. Think about it. You're making this complicated. I'm not making it complicated. You are. You're bringing that toxic mentality to something that doesn't require all that. All we're talking about doing is buying and selling something and making money, folks. That's all it is. It's not complicated. It's a very simple process that you're complicating. You're waiting for a time to do it. You're executing on a model, an idea, and a premise. You're risking a very specific static stop loss. It's rule based. It doesn't morph into some other logic. It's always the same thing. And as the trade pans out in your favor, you start moving the stop a little bit. That's all. You don't jam it at the break even just because you want to get out of that condition of risk. You need to be comfortable holding risk. You have to be comfortable holding it. Over time, you'll know what that good trade feels like while you're holding it. Just like the young man knew what Jade was because he held it. And then when he tossed him any old green stone, as soon as he put it in his hands, he knew this isn't real jade. And he smiled at that young man because he realized at that moment, see, I've been teaching you all along. Just because you don't recognize learning properly doesn't mean you haven't been taught correctly. So with that, guys, I hope you have a very pleasant day. I probably will touch base with you throughout the rest of the week on X, but no more videos, no more any of that kind of stuff the rest of this week. Hope you enjoyed what I presented to this week. Hope you learned something from it. Hope I inspired you to be more responsible and principally oriented and detail oriented about what it is you're doing and what you're thinking about, how you're spending your time. Until I talk to you later on, be safe.